Hi, this is Shane with the Rational Trader, and we're going to go over the settings that you have in the spreadsheet study in Sierra chart that is used by the Rational Trader machine learning system. So let's go take a look at that. This is the NQ here. This is the spreadsheet study. It's this tab in the lower left. And it can be a little daunting. There's quite a bit here, and basically what you only need to worry about column H. Okay, these are the choices that you have to make. All right, we actually already covered the action codes in a previous tutorial, so we won't go over that here, except to remind you that this place here that's with the purple background, lavender background, is where you specify which specific market behaviors and actions you want to place trades on. All right, that was covered in the market behaviors tutorial. Okay, so you've got these other 4 settings here. Okay, or 5 settings. The first one is the limit entry offset, and what this means is when you get a signal on a bar, where do you want to place the limit order? All right, and the number here is how many ticks back from the close of that bar. So if the bar closes, if it's an up bar and it closes at 2000.25, and you have a limit entry offset of 1. Then it's going to place the order at 2000. So let's actually just look at that as an example. Let's say you got a short signal here. The low of that bar is right there. Okay, so the limit entry is going to get placed 1 tick above that level right there. 1 tick above. Okay. And so you can tune that to be conservative or aggressive. 0 would be right there. All right, and any positive number is basically a market order. Okay, so what I found in the NASDAQ is that 1 was pretty optimal, at least with my testing, and that's why I have it set that way. This next dark blue cell is related to the limit entry offset in that you can place that order, but you may not get filled. And the question is, well, how long do you wait before you cancel the order? Okay, so let's go back and look here. And so let's say I place an order. Let's say I get a signal on this bar right here. And so I'm going to place my order 1 tick back right here. And you can see that order is not going to get filled. All right, because the market is just falling apart here. So the question is, when do I cancel that order? How long do I wait before I go, all right, I'm just not going to get filled. All right, and we're answering that question with this cell. All right, this says 1, which means I need to get filled on the next bar. If 1 bar completes after I place my order and I'm not filled, then cancel the order. All right, and so again, in the NASDAQ, that seemed to work the best, in part because the way the machine learning system is trained is it's looking for that instance where the market's going to move 30 ticks in one direction before it moves 10 ticks in the other. And so there's often like a pop right when you get that signal. So you want to get in right away, basically, is the message there. You can see, though, sometimes that will work against you, where you can't get in. The alternate case is it can be too aggressive, and you'll place that order and then get stopped out because you weren't conservative enough on the order. So there's a balance there that you have to find. All right. So I'm using in the NASDAQ 1 tick back on the limit entry offset and cancel the order if I'm not filled on the next bar. All right. The next setting is called noise filter, and really what this is a way to help us stay out of the chop, which is the sideways action. All right, so you can see like right here, the market is moving pretty sideways. And so what we find is that regardless of how sophisticated the pattern matching is that we have, the fact is that when the markets are drifting sideways, it's essentially random. All right, and so we just want to stay out of that action. If the market is sideways and choppy, stay out. All right, and so the noise filter is a way to help tune that. All right, it's currently set for 6. It's the kind of thing that will change as the market conditions change. Right now, the market's really volatile, so we're using a noise filter of 6 in the NASDAQ, which is we're doing a pretty good job of keeping us out of the choppy, ugly noise, and that's what that's for. This is a good example of a setting where if you made the change, you'd want to go back and replay and see what's the impact of that change. And in fact, that's true for all of them, for that matter. Maybe you just test it. Do a limit entry offset of 2 and do a replay for the last month and see what those results are. Make sure that when you do that, make sure that you're replaying enough time for it to be representative of the trading. And in fact, there's a tutorial on doing replays where we kind of talk about that in more detail. All right, the next 2 settings are the max daily loss and gain. So this says if I reach a maximum daily loss of $110, stop trading. All right, so this is how we enforce the risk management. It's set to 110 because I'm willing to take 3 losses in the NASDAQ at $50 each. So I'm using a 10 tick stop, $5 per tick, $50 per trade, and I don't want to take more than 3 losses. So just the way the math works out here, if I take 2 losses, then I'm down 100. That means I would still want to take 1 more. All right, so I'm willing to lose 150, but I don't want to put 150 here. That would not work out well, because what can happen is if you have 150 here, you can be down actually 145 on the day, and the system will take another trade, which is $50 of risk, and so you ultimately could be down 195, and that's not what we want. So what I do is I put 110, and the reason it's 110 and not 105 is I just want to give the market, in case there's some slippage, basically. So if I take 2 trades and I'm down $100, I can take 1 more, basically, and then it'll stop trading. Okay, so this is why this is actually the most important setting here, because managing your risk is the most important thing you do as a trader. All right, and so one of the things about the machine learning system that I like so much is that I can do it. I don't have to be here because I've got this capability that Sierra Chart is providing, which says, I can set the risk, and then if I hit that value, it'll just stop trading. The spreadsheet study will not place any more trades if you hit this loss level or higher. Okay. The green cell is kind of the opposite. It's if my profit is $400 or more, stop trading. And it's the opposite concern. Once you make enough, you don't want to keep trading and give it back. And what I saw in current conditions is that I was getting more. I was getting 20 points or more, and then giving back quite a bit, more than I wanted to. So I implemented this setting. So you can set it for, this is $400 in the NASDAQ is 20 points. So that's a 20-point gain. That's basically, the way that I'm trading it right now, I'm trading for 30 ticks at a pop. So that's like three successful trades, and that hit their targets, and then it'll stop trading. All right, so it's just a quick review. The H column only is what you have to worry about. The action codes are covered in the market behaviors tutorial. So there's more information there. Limit entry offset, how far back from the close of the bar should I place my limit order? Cancel order if not filled. How many bars do I let draw before I cancel my limit order if I'm not filled? The noise filter, a tunable parameter to help you stay out of the chop, and then the max daily loss and max daily gain. Stop trading if I exceed this loss or exceed this gain. All right, and that is it.